speak to us about what the repo rate increase means for the public. We're joined tonight by independent financial coach Eunice Sibiya. Eunice, a very good evening to you. Welcome to News at Prime. What are the implications of the rates announcement for individual South Africans? Eunice, if you're able to hear me, I was just asking what the personal implications are for South Africans now that we've got this rate hike announcement.
The implications are negative and positive. Negative in the sense that when we talk about debt will have a negative effect from, or the increased interest rate will have a negative effect on debt. But there's a positive spin with regards to savings and investments. So we have those two columns or those two levels that we need to think about. All debt is linked to the lending rate. Mortgages or bonds, vehicle finance, loans, formal loans, that is from financial institutions, your credit cards, store cards, any form of formal lending is linked to the interest rate. And the question that I always ask when we do financial coaching and financial training is, do you know how much interest rate you're being charged on any form of a loan? When you open a clothing account, do you know how much they charge you? Do you know how much you are charged on your credit card, on your vehicle finance, on your home loan? Often we don't ask, we don't know. What we focus on in most cases is only the premium or the installment at the end of the month. I do not know how the composition of the installment is, what factors come into it. Now that the interest rate has gone up, do you have an idea what this 0.25% increase is going to do on your installments? How many installments, by the way, do you have every single month that you need to take care of? Therefore, the sum, each payment, do you know how much is going to be increased by? And ultimately, what is the sum total of the increase do you need? Where are the funds going to come from? Where do you have a stash of money where you're going to be pulling from all these top-ups that you need? That's what we need to invest in terms of knowledge and finding the funds. How do we find the funds? Clearly, we need to do some step change. We need to look at our lifestyle. We need to make some adjustments.
So just
the adjustments could, yes, sorry.
On the point about adjustments, ma'am, is it time to hold off on taking on new debt, at least in the interim?
Definitely. That is one of the key factors that we advise strongly on. If you can help it, hold on new debt, particularly unnecessary debt or debt of things that can actually wait a little bit until you are settled. Remember, today is the 27th of January. Yes. So the installments that are going to come off in January at the end of the month, most of them would have been changed already, increased, because the increase is effective immediately. So we're only going to see now at the end of the month how much of an impact or an increase the interest rate has had on my debts. And only thereafter I will know how much extra money I need. So if you were thinking of taking out debt, particularly the debt that is unplanned, hold on to that. There are people that have already planned maybe to buy a house, to buy a new car. Get those calculations, get that quotation redone for you to show the impact of the new interest rate and run the numbers again to see if it's still okay for you to continue, whether you're still going to be okay with a new installment. In some cases, it's only a few hundred rands, depending on the sum total of the debt. But where it comes to bonds and vehicle finance, it can be a couple of hundred rands. Make sure that you will still afford those installments.
That is as far as new debt. On existing debt, how flexible are financial institutions, such as banks, to people coming in to perhaps renegotiate if this increase leads to quite a dramatic change, shall we say, in their ability to budget and meet their obligations as they stand?
Banks are quite flexible in the sense that if you come through and say, I have now seen what my new premium is, or how much it is, I'm going to choke. It is too much. I won't be able to. So what they then do, they can revisit the initial contract. Some of them are flexible enough to say, what was the interest charged initially? And obviously it's bumped up by 0.25%. What was the term agreed upon? Let's take, for an example, a home loan. If my home loan contract right now was calculated over 20 years, and I'm feeling the pinch already, and I'm saying I am not going to sustain, or this is not sustainable. If age allows, affordability allows, the credit record allows, then the bank can say we can increase the term of your home loan from 20 to 25 or up to 30. But there's a qualifying criteria. There are factors that they look into. Everything on board, all clear, they can fully agree to extend the term to 30 years. What that does, it will reduce the premium. However, be mindful that the longer the term, the more interest, charged interest you're going to pay.
You'd mentioned...
However, if you are okay with that principle for now, you can enter into it. And when you're stable again, you bump up your premium. And you can even go as far as asking them to reduce the term to 20 years if you're comfortable to do that.
So there is a fair bit of wiggle room. You mentioned at the beginning of our conversation that there is a positive from this as far as savings and investments. What should we be looking out for, and what exactly would those positives be?
So the interest rate as it's increased with savings and investments, my credit interest that I receive will also increase by 0.25%. So wherever the money is saved, savings, normal savings account, or whatever type of investment investment account, the credit interest will also increase. However, there are few types of investment accounts that might have the interest rate locked in them, and those are often the fixed deposit accounts. If it's fixed for a term, and in most cases, it's fixed with that initial interest rate that you signed up for. So if you have investments, you can just check in maybe online, or you can call your bank and just verify if that type of interest rate is going to benefit from the increase of the interest rate. However, like I said, the majority of them, the increase will be effective. As of tomorrow, consumers will be receiving some form of communication via email or SMS, where the bank will be then calculating the adjustment. For debt, usually they do that. And for investments also, they will send to say the effective rate as of today, meaning today or tomorrow, is now X amount. So the positive spin on savings and investment is quite good. So those that have investments, they will be smiling. Those that receive a premium from their pension funds and stuff like that, they'll be smiling because there'll be a bit of a bump of 0.25%. Where the pinch is with regards to debt. And what does this say to us as consumers, as South Africans, that we are known for, a high percentage of over-indebtedness between 72 and 75%. It requires a drastic lifestyle adjustment, as we said earlier on. And this should include every family member. If it's kids, talk to them not to be wasteful with electricity, with water, with food, stationery, uniforms, everything, because the loss of a shoe requires mommy and daddy to go and buy a new pair of shoes. So let's talk to them. In terms of debt, we already spoken about debt, that if we can, let's hold off taking up new debt, not right now, until your feet are on the ground. You've calculated after you've seen all the increases for all the debts that you have. And also, cut down on unnecessary expenses, traveling, your basic things, groceries, clothing accounts, close those that you can, and maybe increase some of your premiums to pay them off quicker, and use that money that used to go to account number 1 and top up on account number 2, or split it up on maybe account 2 and 3. The money that has always been going to debt number 1 that you've just settled now, do not take it back and use it as maybe entertainment or let it idle. You can either send it to savings so that you increase your stash or pay off some debt, top up on another debt or two, so that you benefit from your early repayment of one debt or two.
Okay.
Those that have home loans, if you can top up on your home loan, you benefit. You'll be smiling.
Quick final one. I was planning to buy a new suit. Does work count as a valid reason to buy it?
What was the suit for? You going to a wedding?
Well, for work and other purposes.
If you can afford your suit, my child, go buy your suit before the price goes up. But if it's something that you can live without, you're good with your clothes and your other suits, your beautiful suits that you have, they are good. Take that money, pay off something else, or top up on your investments. You be the judge.
Thank you very much. That was independent financial coach Eunice Sibiya. Good to speak to you, ma'am. Thank you very much.